Hello, Warriors. Feature yesterday was this trend line that I showed yesterday at the base opening being broken. The question now is this just a little follow through with more to go, or are we going to try and rally one more time with this confirmed high here on the 1 hour? We were confirmed a pretty negative day. Right now it looks like all we're getting is maybe an ABC before a continuation move. And crude, if you look at the two charts, pretty much tied at the hip between the S&P stock indexes and crude. Potential crude is also a failing rally here. You know, we were talking about the potential of a great buying opportunity if we pulled back towards the 49.50 level in here. So that's still a possibility. Looking at the Dixie, 96.50 was it for now. Now we're going to see what type of dip. Dollar bulls probably looking for 96 to hold before a continuation move to the upside. Bears looking for a closes back under 96 to get some type of continuation. The way it's going with cable leading the way makes me think that I want to see what the ECB does, and I'd be looking to sell rallies. Still think that we're going to get a breakdown under 1320. Warned about, you know, not getting aggressively short down here yesterday, and let's see what happens up at 114. There's some confluence of resistance up here, but it's a no trade into at least when the ECB. So get your work done if you want to trade it counter trend to the upside. 114 is possible. This was a pretty big move. 240, so even 120 back would take you to about 1460. Still leaning towards the bear side of euro, but looking for some type of correction that may have begun on this candle here. Also, the gold and silver. Gold had a pretty good bounce with that sell-off in equities. I don't think we're going straight to new highs in the gold. Look at it here. Copper. Right here. So, you know, you have a lot of failing rallies going and a lot of stuff where we had the break, and then you had some buying come into gold. Also, silver held a pretty important area before it turned yesterday right here at 1520. It didn't look like much, but it was a 60-cent recovery. Let's see if this was it. Maybe we still get a push down to 1510-ish. And if that happens, why can't we still trade 1270, 1265 in the gold? So almost everything to me looks like a potential sell on a rally, recovery from yesterday's sell-off in the stock indexes, in the crude, and in the gold and silver as well. So it's almost like it's all one market, selling off, recovering together, and rallying back halfway or so, and we'll see if we get a continuation or it was just one day pullbacks in all of these. But I think it could be pretty significant what happened. Coincidentally, these highs were made in the S&Ps going into the total lunar eclipse. So I talked about it last week, thought that there was potential for some reversal candidates. What gives me a little bit of pause here would be US dollar yen. Don't believe that this has completed yet. Still think we could trade up to 110, 111. Looks like from yesterday, this has had a much better rally approaching recent highs. Could be just flagging here for another push up to above 110. Confluence of a lot of moving averages coming in here right around the 111 area. So if that happens, I'm going to want to see where stock indexes are after that occurs, and possibly buying the metals for a break should we get up to 111.20 in US dollar yen. So that's a quick overview. Our guest yesterday favored on a risk-off trade, Saeed favors Kiwi yen for a short. Although it's much stronger than Aussie yen, at least now, Aussie yen. So keeping my eyes out on this, peeled. We're possibly up here 75.5 or so for a Kiwi yen short, Aussie yen short. So we're not there yet. So far just sitting on my hands today. It's pretty cold here in California, so keeps my hands warm. And let's see what's happening from the side of Blake Morrow's perspective here, and what Blake is looking at. I just want to remind people that although you missed the promo, it's still a good time to try a trial and see if you can immerse yourself in our community so that you could have a dashboard to trade with every day and have the research from the whole team. Okay, so you have all the support and resistance areas. So we have lines in the sand at 13.25, 113. And here's some of the resistance areas I just talked about that show up on the chart. It's right there for you. And then takeaways with what's happening in each individual currency that we're talking about. And more importantly than that is all the different types of analysis that you get. You want to know what Greg is thinking on any pair, you just go to this, or Andre is going to be with us today, and you can see harmonic patterns. Looks like he's looking for something to the upside here. And then you have Blake and Steve cover this a lot, and Steve covers the candlestick, and then you have Celios's macro views, which he's been spot on. And then you get active patterns in play. You know, Greg closed out a very nice stacks. Here's the Kiwi by Grega. He's long. Andre's making some decent money in USD MEX. Blake's got a push going in this so far. Greg trying to bottom pick Bitcoin. I don't think it ever got down to 3,500. Depends on your platform. And Greg has a nice pip going there. So you could see the majority of them are in the green. And when you do take these pattern in plays, it's very important for you to go to the analysis of those pairs so you understand the whys. So the rest of your trading career, you'll know what contingencies to look for and be able to repeat them on your own. Our mission every day is to build up and interview today, Mr. Dale. Yes, Forex Gal. Okay, we have Amelia Bordeaux with us at the top of the hour. Ziggy, it's 12 degrees where he's at. And then also very important to have the right broker. And besides that being, you know, make sure they're all regulated, contact Trent and Justin so you get a rebate check or your trading pays for your subscription here. And they're going to be able to direct you wherever you are in the world to what may work for you. So really contact our sponsors. They're responsive when you get a hold of them, and you may have additional cash flow just from clicking your mouse, although that's not the intention. It's something you're doing anyway. Why not have a little extra revenue at the end of every monthly trading period? So with all that being said, I'm going to turn it over to my colleague, Blake Morrow, and see what he's thinking about yesterday's action in equities, which was pretty significant, and possibly if he's looking for continuation of risk off. Blake, where's your head at after yesterday's action? Kind of like came out of nowhere. You pointed it out yesterday that we were at major resistance at that 2 or 3 year uptrend line that we were retesting in S&Ps, and definitely got a very solid reaction off that line. Very nice look, buddy.
I'm so sorry. I did. You know, it's just, of course, you know, I don't yawn for like an hour and a half, and then all of a sudden a yawn comes out because I'm about ready to say something. But But yeah, we did have a big reaction from there, Dale, but ultimately, if you look at the pullback in equities, and this is the S&P, if you look at where we stopped, basically it was right here. I mean, you can see this like support zone. That was like kind of the breakout area. So we're holding for now. Does that make me bullish equities? No, but I think at this point in time, if we break back below 2,600, that's pretty clear indication that the market is topped. Now, does that mean it's going to happen today, or does it mean it's even going to happen at all? I don't know, but that's the price that I'm actually looking at for the S&P. So, and right now I'm actually hoping it breaks down, because I do have a US dollar Mexican peso long that I'm playing. This pennant that I was buying it on dips yesterday. My cost average is probably around 19.15 or so, and I have to explain to you guys, the platform I use is not a retail platform. It is an institutional platform. So my inputs every day are my own. So because when you're how should I say this? It doesn't matter if you're dealing with an investor or a bank, or you're using somebody else's money. Bottom line, they don't care about, I bought the euro at 110 4 months ago and it's at 113.70 right now. They care that what is your balance every single day. So every day I'm zeroed out. So in other words, and that's one of the reasons why it makes it a little bit more harder for me to trade from a longer term perspective, because I have to factor that into my trading. I have like a daily amount of loss that I can take personally that I uphold myself to. So it's like, if I lose X amount of thousands of dollars a day, I have to call it quits. All right. So and so it doesn't, I could be in a position, I could be long, like let's say I'm long here, and by the end of the day it's over here and I make great money, but the next day it's right back down again and I lose all that. That might stop me from trading for the rest of the day, because that position that day had lost so much value. So the reason why I'm explaining all this is because I know about where my cost averages is when I own something or I'm shorting something, but it's not set in stone for me. It's like, okay, at the end of the day, I put my cost average basically where the closing price was, where my books close every day. I don't know if that really made sense to everybody, but it's not like a retail platform where you buy a currency one day and then you can look back 3 months later and you're still own it at the same price that you bought it 2 months ago. That's just not how my platforms work. If you can see, this is my institutional platform, and things move and are constantly. I delete everything and then I re-up everything. When I close out of a position, I'll if I close out of enough positions, I'll just clear everything out and then re-input my positions where they're currently at, and I'll say, oh, well, I'm long, 3 million euro dollar at this price now, and it doesn't really matter, because I actually have a different platform, which is what we call a middle office platform, which calculates my P&L on a day-to-day basis and all my positions. So this platform here is like I said, it's irrelevant. I can click this button and it clears out everything, and then I have to re-input everything. So it's interesting. And it's a little bit different. I've been using it now for a few years, so it's but that's why when I look at a position, I go, oh, I'm long the US dollar Mexican peso around here. It's because I am long somewhere around here. I'm not sure exactly where, but I'm long around here, according to my journal. So anyway, but like I was just, I don't know why I got on that tangent, but the reason why I was talking about the S&P, because if the S&P does roll over, the US dollar Mexican peso tends to firm up. It didn't do it yesterday, and that was the thing that had me very hesitant about further S&P weakness is because the US dollar Mexican peso was not making headway. But today it actually is firming up. We got a nice little hammer on this 4 hour, and that suggests that stocks might be near they may be ready to roll over again. And if you go over to an hourly, it looks something like this. Let me do this. And you know, what else is funny about the conversation we were just having, Dale, is I was talking to our guy in our office that basically you know, watches everybody in our office as far as positions go. He's our admin basically. He's like, man, you know, he was talking about his own personal platform. I'm like, yeah, I don't know why JP Morgan and other institutional platforms don't take their cues from the retail platforms. They're so much easier to use, so much like 100% easier to use than institutional platforms. It just really is. Anyway,
what do you think the reason is?
Because it's what I told you. They have to
they have to mark to market everything every day.
Gold, yeah, they do. It's mark to market every day. So okay. Gold just took an absolute nosedive just a moment ago. So Chi in the chat room just said, whoa, look at gold. And gold just looked like it just whack-a-mole some stops here. Woo-hoo, look at that. That's a 1 minute chart. So over the last couple minutes. It hasn't affected FX. Well, you can see the dollar yen's a little firmer, which, you know, that happens when whoops, where'd the yen pairs go? That happens when gold sells off, you know, dollar yen spiked up there. So let's talk about some things that are really on my radar today. So first and foremost, I am long cable. So I bought cable. Now, if you use ForexAnalytix, you got notified hours ago. Pound dollar is stalling at the is stalling at the key 130 level, and possible cup and handle pattern is setting up on the hourly chart as well. And here's what it looked like. And then once we broke the 130, we're rallying. You know, we're up kind of where we're at right now. And then just noting that broke higher out of the cup and handle, and we were close to the 127% extension at 130.48. So now the cup and handle pattern, just so you know, it actually points to 131. So if you're out there shorting the pound, just be really careful, because the pound looks like it's going to 131. The thing about the cable, and I tweeted about it. I talked about it on the week ahead video. I tweeted about it last week. I said, no matter what's happening, no matter what the news is telling you, a break above 130 is bullish. You're going to get people scrambling to cover their shorts. And you know what's happening in the cable right now, Dale?
Unwinding of euro pound.
Well, that too, but no one's selling cable. Look at the intraday chart. This has been bought, and it's being held. Whoops, it's being held. No one's selling. Everybody is buying. What you could say, they're getting long. You could say they're covering shorts. Whatever. It doesn't really matter. They're buying. We're buying.
Approaching your key level though, Blake. Like we're what, about 60 pips away. 131 was your big level in the pound.
Well, well, it was the 161% extension as a cup and handle extension too. So you can see 130.47 is the 127% extension right here. Okay. The 161% extension is 131.10. Cup and handle points to basically 131. So if you're shorting the pound right now, hold on, I gotta itch my head. I gotta pull off my headset. Hold on. Oh, that sucks. Nothing like my head itches. I have to pull off my hat. I went to the gym yesterday, and before I went to bed, I obviously had to take a shower before I went to bed, but it was so late last night. Yeah. So my hair was all
that head and shoulders.
The head and shoulders was really playing out on my head. Right. No, I washed my hair, and I got up this morning, and I look like I have like a 40-inch mohawk, and I'm like, oh, if you could see what my hair looks like at 3 in the morning. after I take a shower. So I got up this morning, I put a hat on. Of course, my head is itching there, and it probably has to do with a little Head and Shoulders. Anyway, see, I talk about Head and Shoulders. Next thing you know, I'm itching my head. But if you're shorting the cable, or if you're thinking about shorting the cable, you have to be really careful here. I think as long as we are above 130, 131 seems more logical target at this moment. And frankly, if you ask me, right now, I mean, based on what we're seeing right at this moment in time, I think we see 131 before we see 130 again. So if you're thinking about shorting the cable, why don't you wait till we at least hit this fib level, at least until we hit the 127% extension, or you exercise some serious patience and wait till we get to 131. 131. Let's see if that matches up with anything, because it might. I mean, 131 here is the 78% retracement of where the channel started. You can see it right here. You see that fib? Okay, so it's the 78% retracement of the fib down, and so that comes in at 131. Why don't you wait till we get to 131 to short the cable versus trying to short it right now as it's breaking a major fib and major key resistance and round number. I mean, so I would just be very, very cautious in your approach at this point if you're out there shorting the pound. And Andre's coming in today, and he's gonna talk about some harmonic patterns. So yesterday, now this is a real benefit for you guys that are not ForexAnalytix subscribers, but you wanted to, you're taking advantage of the free webinars we do. Yesterday we had Greg Horvat on. If you missed that, you can go back and listen to the recording. And keep in mind, we do all this for free, guys. This is, for you all out there. So we had Greg Horvat talking about the Elliott wave patterns that we're setting up in Forex and in equities and the major indices. And Andre here in a few minutes is going to be here talking about some of the harmonic patterns that are being set up. But what I will do real quick, because I know Andre's here, I'm going to make sure that I cover Canadian retail sales before I turn it over to him. So anyway, but the pound's breaking out, and as long as it's above 130, you got to be careful about being on the short side. Now, you were talking about the Kiwi, Dale, and I know you brought on a guest yesterday, and he was talking about being bearish the Kiwi. Well, the New Zealand CPI numbers came out stronger than expected, and the Kiwi just ramped up last night, and it surpassed the Aussie. It really took off. I have pound New Zealand longs, and the pound New Zealand long is actually back to positive on the day, where it was actually it slumped quite aggressively last night, but well above my stops. My stops are below 190. So, but we bounced back to being positive on the day. That's how I'm trading New Zealand weakness, is I'm trading it through pound strength. But because if you're doing it against the dollar, or you're doing it against the yen, you have the New Zealand is up in your face right now. Yeah. Now, the one thing about the Kiwi that I will say is we're coming up against, triangle resistance, which, with the pound breaking out, with the euro, you got the ECB tomorrow, and the euro could very easily be trading at 114.15 or 114.50, especially if the ECB is not as dovish, and they're more of, they pull a Dale Pinkert and they're sitting on their hands. Hey, yeah. Dale, just whatever you do, don't give me a thumbs up. Oh, that'd be funny.
Thank you, buddy.
All right. So if the euro is breaking out and the cable's breaking out, the Kiwi, as much as I hate it, it's pretty resilient. The Kiwi could very easily break above 168.20, and we're going to be trading, well above. We're above the 200-day moving average right now, but we can trade a little bit higher. Oh, speaking of the 200-day moving average, I must note the pound dollar 200-day moving average comes in around 130.70. 130.79, so just keep that in mind. All right, but the Kiwi really strong, and that inflation data is helping its cause. And like I said, if the sorry, I'm laughing at a mirror. If the euro breaks out, the cable could, you know, break out and then drag the Kiwi up with it. So just be careful if you're short New Zealand dollars. Now, if you're short New Zealand on a cross, you know, it might be a different story. But now let's talk about the Canadian. All right, so the Canadian, we have this bear flag pattern. I'm not trading Canadian dollars right now. I have no position. I actually haven't had a position in the Canadian dollar since I was short the New Zealand Canadian a couple weeks back. I haven't been trading the Canadian at all. However, I think we should pay attention to it just because of these retail sales that are coming out, and you know, maybe we just didn't draw that correctly. I have to adjust trend lines on the fly. So, you know, this is an example of where we might have to adjust on the fly. I still think it is potentially a bear flag pattern. Okay, potentially. We have a strong retail sales number, and you know, we could see a sell-off. Now, one of the things that makes me question the downside in the dollar Canadian is it didn't sell off yesterday when equities rallied back. And actually, as equities were selling off, the dollar Canadian was going up, which I expected. We talked about this yesterday. If stocks roll over here, that could really put a bid in the dollar Canadian. So you got to be a little careful with it. And you know, my 2 cents is if I don't know what to do, then I'm just going to leave it alone. And that's what I'm doing with the Canadian currently. What would get me bearish the Canadian, where I would be, you know, tactically bearish, I guess, or more of a, you know, just a more of a bearish bias, and I would start looking for shorts as if we broke through the flag bottom, which means we have to drop through 132.50, which is still 60 pips away, 60, 70 pips away. So I'm not doing anything with it at the moment, but that doesn't mean that we won't watch it for retail sales here in a couple minutes. I was just short in the US dollar Norwegian krona this morning. I've already pulled my trade off the table. I sold it here a couple hours ago at 860. I covered it at 850, 850. The reason why is this has a longer term head and shoulder pattern setting up. Looks like this. And I still have a short pattern in play for ForexAnalytix. So that means my bias is short. And that means I'm, you know, still selling rallies. And I did that today. We have to get all the way above 865 for me to not be selling rallies anymore. Okay, so we have Canadian data coming out in 2 minutes. I know Stelios is here. Good morning, Stelios. Are you here?
Yes, I am here. Good morning, everybody.
Good morning. So we have Canadian retail sales coming up. So yes. What you thinking with this table move, huh?
Yeah. Well, we had the amendment brought forward by Labour MP Yvette Cooper, which is basically giving a way to make an extension for Article 50. And this seems to have backing from Labour for sure, and it might have enough backing to be passed. And if that happens, then you know the proposed deal starts looking a little bit different. But you know, this is something like Amanda very correctly said. This is something that's been on the table for a few days now, and it's you know, it's funny how the markets pick their time to actually react to data. It's almost been done with a lag, simply because it's been on the websites today, and it's had a lot of focus on it, but it's not really news. But you know, the main thing is that we still wait to see what's going to happen with the agreement, or if it's going to be passed, if it's going to be Article 50 is going to be extended, all sorts of unknowns. So you know, yeah, I mean.
Okay. By the way, we have 30 seconds till retail sales.
Yes, we do.
Yeah,
we had some weak data yesterday, remember, from Canada. Let's see what this one.
So I want to say really quick, like I said, I bought the pound. I don't care what the tape says. I don't care what the tape I don't care what the news stream reads. I'm long because of the breakout. So
yeah.
You know, whatever the reason why, it doesn't matter to me anymore. I know 130 was kind of a big level for the entire market, so that got me long. Okay, retail sales worse than expected. Wow.
Yeah.
Wow.
Yeah,
across the board.
0.2 worse, and lower revisions as well.
Yeah. Oh, look at that. Oh my gosh. Oh my gosh, that the dollar Canadian is going to rip higher.
Yeah.
Yep.
I mean, oil is kind of helping the Canadian. It would have been much higher, I think, USD CAD if oil wasn't up 1% today.
Oh yeah, that's a good point. And I don't have any Canadian exposure, but I know a lot of people have Euro Canadian, and a lot of people in our chat room have been trying to play this thing to the upside. I actually like the Euro Canadian on the long side. It looks pretty good. So because I actually believe the euro is going up this week following the ECB tomorrow. I think the risk is that does happen. Now, I don't want to take up too much of Andre's time, but Stelios, is there anything else that you wanted to mention before we turn it over to Andre? Is there anything that's like really catching your attention this morning?
Not really. It's all been about sterling, and I actually want to say I agree with you on the ECB. And if you notice, Draghi has kind of turned a little bit more dovish tones over the past few weeks. So I think you're absolutely right. And the guys, they're not stupid. They can see that there is probably a global turn in terms of economic activity. So I don't think the ECB is going to be, fast out of the blocks after the summer to be hiking rates if things are not looking rosy overall.
No, you're right. But at the same time, you've got an ECB where everybody's expecting a very dovish ECB, but it's not like they're going to start some sort of new QE mechanism right now. They're going to be in a wait and see mode. Hey, Andre, Andre, by the way, hey, I could hear you. Just want to let you know that your mic is on. So
I agree, Blake. I don't think there's going to be anything new, and that's the way Draghi is as well. He's turned the corner a little bit, but I think it's going to be pretty much the same. Wait and see until something changes.
It is, which I think actually will put a bid underneath the euro, because people will go, okay, they're in a wait and see mode. The Fed's in a wait and see mode, but still the market is still, I think, priced in a pretty a more hawkish Fed than we've got. So I think that was my argument over the weekend on the week ahead video, that I think we are range bound between the 115, 116, 113 level, and we're probably going to be closer to the middle of the range by the end of the week. So I think we're going to be trading above 114 towards 114.50 by the end of the week. So and the only way that I'm going to be proved wrong is if Mario Draghi comes out tomorrow and explicitly states that they are looking at a whole new round of some sort of easing mechanism that they have prepared, and I don't think that's going to be the case. I think it's going to be more wait and see, and I think that the euro is back above 114. So I'm playing it on the long side, but I'm not long. Go ahead.
Yeah. Okay, no, I was just going to say, Amanda, thank you. She reminded us that we have PMIs tomorrow out of the Eurozone, Germany, France. And
that's big ones. Very, very good reminder, Amanda. Thank you very much. And all those are.
And also we have Norges Bank interest rate decision, not expected to move rates, but as usual, the commentary is very useful.
And one of the other things I think we should note here, look at the French PMIs are so close to 50. If we dip into contractionary numbers, and by the way, contraction is below 50. So if we start seeing readings below 40, or in the 49.5 range or something, that's going to be like we saw the last month. And if we have a sustained break of 50, that's not going to be good for the ECB. They're gonna not take that too kindly. I know with all the French protests and everything that's happening in France on more of a macro level, it's a little wish-washy. Okay, so anyway, like I said, I don't want to take too much of Andre's time. Good morning, Andre. How are you?
Hello. Good morning, everyone. Good morning, Blake.
Hey, thank you so much for being here. And Coach, are you here too?
Yes, Blake.
Okay, just make
Andre, sounds kind of like you're in a tunnel. Are you talking on the speakerphone?
No, I'm using my microphone. eventually it's because of the room. Let me just check.
Okay.
We can hear you okay, but we can hear you okay. It does sound like you're in a room, like your microphone's not connected, like you're using your computer's mic.
Oh, let me just check. Eventually I'm using other microphone. Let me check.
Okay, Blake, I have it from here if you have to run and go make money.
Okay. All right. Well,
yeah.
yes, Andre, that actually sounds great.
Yeah, that's great. No feedback or anything,
I was
Andre.
using other microphone.
Yeah, it sounds perfect.
Don't use that. Throw that in the garbage.
Don't use
it. I passed you the charts, and hey guys, have a great trading session, and hopefully we'll have Steve back tomorrow. And thanks, Andre, for being here.
Okay, thank you.
Go ahead, buddy. Good luck. And hi, Andre. How are you today?
I'm fine, thank you.
Good.
Just to try to share my view on those pound-related pairs. So as mentioned by Blake, we are now facing. For me, it's a crucial level where I will try to identify. So where I try to identify the best or the next pressure level, and for those who are buying these markets, cautions at those low levels, because we are approaching the descending trend line as previous resistance level, and also the Fibonacci level and the completion point for the bearish bat pattern, as I published on ForexAnalytix. So let me rewind just into a 4 hours time frame chart, because it's interesting, because Blake was trying to push our attention to this cup and handle here, which is very interesting because we have the previous one below, and the default projection for that pattern below, it's exactly the price. It's where the price is now. Obviously, we are now trading above this most recent one, but if we check our RSI conditions, we see the market entering overbought conditions at this point. So I will not be surprised. And the reason why I'm mentioning this is because for those who are trying to buy this market, I believe we need to wait a little bit. I need the market trying to print some consolidation period or some sideways movement or process above this trend line. A better level or a confirmation level above the weekly resistance will for sure trigger more upside momentum. Until there, the next pressure level that I will search for eventual pullbacks on cable, it's this bearish bat pattern completion point at 88% retracement. But as usual, and to finish with cable, because I have nothing more here rather than waiting for those completion points. If the bat pattern fails, we can always we just grab it. No, we use actually an extension from the previous swing, and we try to extend to. We will try to search for the 161.8 extension from all these previous swing, and that will put the price above 136 on cable. So if the bat pattern fails me as a reversal behavior, I'm not saying the bat pattern will not work and provide some relief from there. We are approaching, as I said, a crucial level between the projections for those patterns, the Fibonacci levels and previous major resistance, so the weekly resistance. Above those levels, obviously, will increase the probability to trade higher. And if that happens, the 161.8 extension, if the bat pattern fails, you just grab it, and if that happens, we will see cable trading around the 136. Obviously, for that to happen, we need the price to retest those levels first, and the market should offer opportunities to go long during that process. Dale.
Got it, buddy.
Okay.
Yep. So yeah, I put that out on Twitter.
Yeah.
That if what is it? If a bat fails, crab it.
Yeah, if the bat pattern fails, usually because the bat pattern is usually a reversal pattern. So if you are trading inside the bullish momentum, usually a bearish bat pattern will force the price to reverse the major trend. If that fails, usually the price will keep trading in the direction of the previous momentum, the major bullish trend. So if that happens, usually the market will extend to those Fibonacci levels. At least at those levels, we know there's let's say a higher probability for a deeper for a relief, and the price should offer an opportunity to trade lower from there.
Okay, that's a pearl.
The pound versus yen, and this is for all those yen pairs. Let me just push a daily time frame. All those yen pairs have been pushed lower. This was, as I mentioned before, those were the news events around, I believe around Apple equities 2 weeks ago that has forced the price to sink among a few currency pairs.
Yeah, and that was the yen.
Yeah,
the yen and
overnight
flash crash.
Yeah. Exactly. An overnight session, the markets have sunk. Some of the yen pairs have printed a few bullish patterns. Obviously, during that period, it's completely impossible unless you have a pending order to engage the market that specific price. It's almost impossible to go long during this process because it's chaotic momentum, and obviously it's not easy to trigger the market on those conditions. But somehow the market extended to those levels as it has printed a weekly support below, and it has rejected immediately after a period of time. So this is a daily time frame chart, and during that same overnight session, the market has started to recover. This was just one example of the price rejecting this price level, and I published this chart saying, okay, if the market somehow decides to break this descending structure trend line, I believe the market will gain some strength and to trade even higher. So from here, at this point, we have previous structure support level. It's now a resistance pressure level. We are trading a few points above the golden ratio from the previous monthly support to the most recent weekly support below. So we are approaching previous structure support level. It's now a resistance. Trading above, we have the 200 moving average also as an element of potential pressure element, and obviously trading above that media, we have those weekly resistance level.
You covered the pound. You covered the pound, right? Because we have someone asking if it's a bear or shark on the daily, pointing to around 140 on pound dollar.
Pound dollar. It's not a shark pattern, and the reason why it's not a shark pattern, it's a bearish bat pattern. The reason why it's not a shark pattern at 168 extension, it's because of the close price of the close price here. So we have this retracement here, this pullback, retesting those lows. Actually, it has printed a new lower low below the previous one. So we have a new lower low, but the market has decided to close above the lows from the previous one, and that will change the market, the ratios or the conditions or the criteria to identify the bat pattern or the shark pattern, and that will depend also on inside the structure. But obviously we search for zones, and I will not search for a specific. I suggest not to search for a specific price. Obviously you need a price to enter the market, but in order to search for a behavior as a reversal behavior, you need a box, you need the cluster box in order to identify something that triggers you in this direction if you want to short the market. So at this point, it's the bat pattern, It's the 88% retracement as I published it on ForexAnalytix at 130.93. So this is the exact price and the 88% retracement, the Fibonacci retracement where the pattern will complete. It's synced with, as I said before, with this descending trend line. So wait a little bit more, wait for confirmation. Note that we are not trading, and I'm not trading over bought yet. I use my, as I said before, I use my higher band and lower band at 80s and 20s as to identify extreme oversold or overbought conditions, because I always like to search for divergence on those conditions. Note that the market is not there yet. I'm not saying the market will not be rejected from here, but the completion point and the best risk-reward level, it will be the 88% retracement in my point of view.
Selfishly for me, Andre, I know you showed the crosses with the yen. How about the yen itself? I'm curious what kind of patterns are either active or you're looking for in US dollar yen.
Let me push that one.
Because I see some confluence up around 111 just based upon some moving averages. I'm wondering what kind of patterns are evolving for you.
Well, at this point, we are trading previous structure support level, as you can see. So this we are nailing the previous structure support. This is a resistance, as I published it before. At this point, I was expecting a pullback at least to the 50% retracement. As we can see, the scope on the 200 moving average is pointing higher. The market is trading higher. We have no oversold. Actually, we are rejecting at this point the let's say the zone, the 50 million area
so
size.
We're still working on the fulfillment of this bullish pattern.
Yeah, it is weekly supports. Previous weekly support 111.373, previous weekly support level. It's now a potential resistance level. Also, the 200 moving average pointing there. So I will not be surprised to see that a retest of that level. But for that to happen, we need to violate completely this structure that we are now retesting. So at this point, any type of pullback should force the price to at least to retest this previous broken resistance level.
Okay. Should we reach 111? Any potential bearish harmonic patterns that could develop from there? You can't look ahead.
We don't have at this point. Let me just check if we consider the breakout of this previous support level. So we have a new swing here. If we measure these pullback and if we search for the 78-88% retracement from this last swing, we can try, eventually the price can find some pressure there around below that level, below the weekly resistance. What I mean is something like, it's not so usual, but well, eventually a bearish bat pattern below the previous structure support level, it can happen. That should force the price. That should force the price to retest the broken structure, also. But I prefer to search for conditions, and because we are
right now, there's no reason to look. There's no reason to look for shorts.
No.
Right now,
not at all. Not at all.
Got it. Thank you, buddy.
And actually, if we think on the market conditions at these points, at those levels, and just to finish, Dale, it's what we search for when we try to find a motive to trade the markets. It's the best risk-reward opportunity to engage the market. If the market is not offering, and what we mean with the best risk-reward is a situation that allows us, in this case, to enter in a short, but respecting the major structure. So if this is a daily time frame, we have those highs above those tops. If you want to short the market, you need to set your stops above those highs if you want to try. So the best risk reward obviously is a retest of that structure. Set your stops above and let the market to print some relief. From this level, you have this previous support level as reference, but you have a huge box where the market will eventually swing around, and we don't have the best risk reward for sure shorting the market from these levels.
Okay. You know, we had a nice recovery. I'm trying to remember last week you did show some either silver or gold, and we had a decent retrace of about 50-60 cents in silver before the rebound.
Yeah. Let's check those charts. So we have, let's keep this, let me keep this time frame, and let me keep this RSI. So at this point, we are retesting. This is another bearish bat pattern, and those are the situations where the risk reward is not there. So I was not trying to engage the market in that direction because I have no criteria in order to engage the market. I have no decent risk.
Yeah, it was moving sideways for 2 weeks, and it could have come out the upside first before it did this.
It can, but nothing. When I talk about harmonic patterns, nothing tells me during that sideways process the market will.
Right. Me either.
Okay, but so that's
even when I play my harmonica, it doesn't help me at all.
It moves sideways for sure. Sideways for sure. Yeah. So, but at this point we are threatening or retesting what we call, what we may call this ascending structure channel or ascending structure, and this was the trend line which was acting as a resistance level. So we are now for the third day retesting that same level. So this is previous structure support level. It was printed at this previous structure pullback here, this candle, and we have a clear bullish divergence between the previous bottom on RSI, which makes reference to these lows on price here. So we have the price is already, actually the RSI is already printing new lows below the previous one, and the price is rejecting to follow that same behavior. So obviously if the market, to invalidate what I call the bullish hidden divergence, the market needs to trade below these levels, the 1245, I'm sorry. So the market needs to sink below those levels. So which means that inside this range where the price is now and the 200 moving average, I will consider, and because that's what the market is showing at this point, I will see the bullish hidden divergence between the RSI and the price.
You want to explain hidden divergence? Most people know about divergences that are obvious. What's the difference between, say, an RSI divergence that I talk about with, price and momentum not confirming, and hidden divergence?
Well, usually, it's usual to search for bullish or for hidden divergence inside the trend. So for bullish trend continuation events. So what I mean is, if you are trading bullish as we are, or in a bullish momentum, we will search for opportunities to buy the market. And for that to happen, I need the RSI, the strength of the pullback faster than the price, and the price rejecting to violate the previous structure support or resistance levels. In this case, the price is rejecting to trade below the previous support level. And as we can see here, the market is, there's no difference because we search for different criteria here. I will not, one of those, let's say that bullish hidden divergence for bullish trend continuation, and you want bearish divergence for reversal events, no? So we are talking about different conditions. So if you want to try, if I want to try to search for conditions to buy a specific market which is trending higher, it is trending bullish, I will try to identify bullish Highland divergence where the price rejects to follow the relative strength index momentum also. So if I want to search for bearish conditions, I need a new high. No, I need a new high on price, and the RSI needs to stay below.
I see.
No,
right.
So we need. What I mean is, what I'm searching for on gold at this point is somewhere between this range, and this is a daily time frame in the nude range, but we need to understand if the market violates this previous structure support, this daily support. It's very natural to sink inside this channel again and to search for elements for pressure. So one of those elements will be the 200 moving average, and obviously the Fibonacci level, the natural nice. Fibonacci level, which is the 38% retracement. So from here, from anywhere inside this range, I will search for an opportunity to buy. Eventually the market is forging now one, but I believe there's opportunities to buy the market, to print new highs, and then we will see if the market will offer that bearish divergence with new highs on price, with the RSI rejecting lower highs on RSI.
All right, Andre, perhaps, you know, with the ECB coming up tomorrow and the euro having done nothing for a long time, what kind of possibilities are you seeing bullish and bearish harmonic-wise in the euro tomorrow so we could be prepped for tomorrow?
Euro for me is a mess, completely mess.
Okay, okay.
We have a decent. I've published that chart, I believe. We have a decent structure, at least supporting the price. And I always think about risk reward. And for those who are thinking to buy this momentum, this previous loss, eventually this is the momentum or the moment to do it. But you need to respect those lows, so you need to buy the markets respecting those lows. But I'm not seeing at this point that to happen. We have no oversold conditions. This is a 12-hour time frame chart. I can check that on a daily for those who are searching for those time frames. As we can see, this doesn't look for me an impulsive momentum, more correctives, more sideways process, eventually new lows below the previous one. Oversold conditions, I will search for those conditions inside my charts. I have no such conditions. So at this point, honestly, not that I don't care, but it's not on my horizons to trade euro versus dollar at this point.
Yeah, that's also a view. Sometimes the view is the best trade is no trade, and that's why you scan a lot of different markets. So it's okay to say I don't know too. So
yes, at this point I have no decent criteria to share. I prefer to stay with as an example with Blake view, this wedge formation which tends to break above. Who knows? Let's wait and see. But at this point, in terms of harmonic trading, I prefer to stay out and to not share ideas there. Yeah.
Okay. Well, I want to thank you for coming in and filling in for Steve, Andre, because it's not easy to fill his shoes, and want to let our listeners know that Andre's harmonic work is available on the website, and he does a great job with pattern and plays, and really an excellent trader and great discipline with his harmonic work. And Andre, you're always a part of my intelligence gathering before I click the mouse.
You too.
Thank you so much. Yeah, really appreciate you being a great part of the team. And with that being said, I see Amelia Bordeaux is in the house, and good hunting the rest of the day to you, Andre, and look forward to keeping up with your work, which is, in a way, it's not science. What you do is an art. So thank you very much, buddy.
Thank you very much, Dale.
All
Thank
right.
you.
Hi, Amelia. I want to welcome you to our community. I really appreciate you taking the time out of the day to be with us. I'm now making you the presenter. And as you'll see, you have the ability to share your screen and turn your mic on. Let me just make sure your mic is on.
Can you hear me? Hi.
I can. Hi, Amelia.
Awesome. Hi.
Very nice to meet you.
Yeah, nice to meet you too. Thanks so much for the invite today. I'm excited to be here.
Well, Joe Perry suggested that I reach out to you. I'm so glad you reached back, and I took a little look at your website, and nice website, and
thank you.
You used to have your own show on CNBC.
Yeah,
you know,
did.
So what I like to do though, Amelia, is take people and traders and educators and analysts back to the beginning of their career and find out how it happened for you on the long and winding road of becoming a trader, mentor, educator. How did it start, and who were your influences?
Sure. Well, let me just start. I have a similar background to Joe Perry, which is exciting. I'm not a technical trader, but we both come from more the institutional side. He was at SAC Capital for a while, and they were a client of mine for a long time. Anyway, this is Market Compass. It's based in New York City, and this is kind of my background here. So what happened was after college, I was an economics major. And the Federal Reserve Board was looking for someone to start. It was Asia financial crisis. And so they hired me to come in. 98. They hired me to come into, it did start in 97, the Asian financial crisis. They were already a little bit in. So they hired me to come in, and I worked in the international division, the international finance division, for a man named Ted Truman, who was kind of a mentor to Alan Greenspan. They would consult a lot with each other. And, he's had a big career in international policy making.
Did they teach you how to carry a briefcase?
Actually, I was in charge of delivering Greenspan's briefing books ahead of the FOMC and the G7 meetings. So that was, I would take a little bit of a car ride to his house, and we dropped some briefing books off for him. So I coordinated the briefing books. So it was really cool. It was a very fun experience, and it was very international, and it was an exciting time. And the reason why it was an exciting time, I kind of wrote this on some of my Instagram pages. It was the introduction of the euro, my first year at the Fed. So, January 1, 1999, that was kind of like less than 1 year in for me. The euro was introduced, and, we just had the 20th anniversary clearly this year. And it was such an exciting time. And having just graduated from college, I didn't really realize the enormity of the situation, how important it was. But it was so interesting to me, that I wanted to stay in foreign exchange, and I wanted to continue that as a career.
Do you remember the price of the euro when it was launched, Amelia?
Oh, I'm trying to remember. I think it was like 118.50 or something.
Yeah, I'm kind of thinking the low was around that time period, around 85 cents or 88 cents.
Yeah, it was like the average when it just came out, though. And then I remember like a year or two later, the physical currency was introduced. And I remember there was a lot of activity like around the Fed thinking like, would the euro coins work in the Paris subway? And, just things like that they were really worried about. And yeah, it was such a cool time. And so a group of those people, after I had been there like a couple of years, left, and they went to Wall Street, and they took me with them as an analyst. And I ended up at Deutsche Bank in its early days in New York City. And then basically I just stayed in Wall Street for the rest of my time. I never realizing that that's what I would, not having that intention when I began, but that's what I ended up doing because I loved it. So I was in the economics group, and I moved to the foreign exchange strategy group and foreign exchange sales and trading.
Wow, God, you were blessed and fortunate to have taken that path. The path that a lot of people have to take is, become self-taught, and they go on the internet and they're looking to learn, and there's a lot of charlatans out there. You were rubbing elbows with the best of the best at the Fed. Deutsche Bank, weren't you?
Yeah, I was really fortunate. I started at Deutsche Bank, and then I went to 2 hedge funds. So I went to the buy side where I did some trading, and then a UBS, Swiss bank, picked me up as its head of foreign exchange strategy for the Americas. And so I ran that, and that was a very tumultuous time, but it was a cool time to work at UBS because it was the European banking crisis and the Greek crisis. And I was at a European bank. So that was like, big deal to experience there. And they also put me on the commodity research board there, which was very exciting. They're one of the world's largest gold traders as well. So that was kind of cool to learn and see about that.
No,
UBS.
Okay.
And so, they have all the gold vaults in Switzerland and in Singapore, and it's really, really interesting to see that. And
does the U.S. have any gold in Fort Knox?
They do at the New York Fed, I know.
Oh, okay,
downtown.
that's right.
Yeah, for sure.
Yeah, well, after 9/11, they were worried about one of the towers or in the basement.
Yeah, I think during 9/11, because I was not at the Fed, but I was downtown on the day of 9/11. I was working at Deutsche Bank. What happened was, I think the Fed, to protect people, put them down in the vaults. Actually, the staff, and so, but they were safe. And but in any event, I think at that time they stopped the public tours of the gold vaults just because security downtown too. So
is that one of the instruments? I know sometimes, what you cut your teeth on is something that you become an expert in and get a feel for. Is gold one of the instruments that you're still fairly active in and follow?
I follow. I haven't been too active in it. I just find currencies are more liquid and easier to get in and out of. But I'm a G10 currency specialist, and I feel like that suits, the retail community a little bit better because, the carry is, it's very hard to like say short Argentina. It's so expensive, or and it's so illiquid too. So my background has always been G10 markets, and I've never. This is my first entry. This in CNBC was my first entry into retail trading. I've only been on Wall Street, and I've only ever dealt with institutional funds. But the fun thing about being on Wall Street too was when I worked at UBS, especially, and at Westpac kind of after that, I got to talk to all of the major hedge funds in the United States and real money funds because they all traded with these banks, especially UBS. We were the second largest foreign exchange trader in the world at that time. And as a matter of fact, 2/3, we were in Stamford, Connecticut, 2/3 of the world's South African rand came through our Stamford, Connecticut trading floor in the New York time zone on a daily basis. So, basically if South Africa wanted to control the currency, they needed to call the desk at UBS to intervene or whatever they wanted to do. So it was kind of, the flow we saw was gigantic. It was really exciting to see that. But it was also great to just talk to all these hedge funds and real money funds to not only figure out what they were doing at the time, but more importantly, and which applies now, was to get a feel for how they invest and how they look at markets, because the framework for how they approach markets, because that's something that even if when markets change, you can still look at that framework and you can still learn from that and apply it going forward. And so that's kind of what my company Market Compass is about. I want to take the very large institutional and hedge fund frameworks that I've learned off of and I saw the best, hedge funds in the world trade off of. And I want to apply those and teach those to, a retail market. So. Okay.
So I am a big believer in communities, number one, and number one as well, tied is intelligence gathering. Do you still bounce ideas and exchange market views with a network of people that whose work you respect, and
for sure.
and include that in your equation for trading opportunities?
Yeah, for sure. I mean, you never want to just have such a strong view or narrow viewpoint that you don't see the risks around the outlook. And so, you always want to have that friend or that person in the market who disagrees with you, so you can see maybe the holes in your trading theory or where things could go wrong. We would look a lot like that for those things, on an institutional trading desk, because while some people call traders risk takers, they're also known as risk managers. So when you take a risk, you then have to manage it. And so you need to know all of the, things that could go wrong around it. And so I like to talk to people with contrary views to mine, actually, to see, okay, where could this go wrong, and to prepare for that and hedge against it maybe. But yeah, for sure, I talk to a lot of people on the street and get and get their views. And they're so helpful. You know, I worked at a lot of European banks. I worked at Deutsche and Swiss. So with all of the things happening in Europe and Brexit, I have really good friends in the UK and really good friends throughout Europe who, you know, they're on the ground, you know, so I can get kind of firsthand information like, okay, this is what we're reading on the BBC, but what is it really like in London right now? How are people really feeling about Brexit? What's going on, you know?
Yeah. Ever crossed paths with Mark Chandler? He's been on the street. Yeah, Mark, excellent FX analyst. So, you know, very good timing for you and I to be talking, Amelia, and from the ECB. You know, what are your expectations for what Draghi's going to do, considering, you know, we've had some softness in European data? Do you think he's going to backtrack on when QT may begin in Europe, just like the Fed did? And do you have any view as far as directionality in the euro, because it's been sideways forever? It's been sideways forever.
Yeah, so we have some market themes, and one of them is Europe, but these are the market themes that we're really concentrating on right now. The US economy and just where it is in the growth cycle. Are we late cycle or are we kind of mid cycle? Because that matters, especially for commodity currencies. The China economic slowdown, which matters very much for Aussie. And of course, European political uncertainty and economic slowdown, and Brexit uncertainty. So since you asked about Europe, let me just forward here to Europe.
Okay. Oh, thank you so much. A PowerPoint.
PowerPoint.
Put some time into it.
For euro. So yeah, growth is slowing in Europe, and Draghi's going to most likely, obviously, you know, acknowledge that, and inflation is slowing too in Europe, and he's going to acknowledge that as well on Thursday. So there's downside risks into the meeting or the policy announcement on Thursday for the euro. You know, there's still uncertainty whether Italy can meet its fiscal targets. And to your point, the central bank did end its quantitative easing in December 2018. It looks unlikely that the ECB is going to raise its policy rate anytime soon. It had thought maybe August, but that doesn't look real. Now, what people are talking about, the big macro hedge funds are kind of talking about out there, is the ECB is risking a policy error. And so for people who've been in the market a long time, the macro people, they are equating what the ECB is doing now to Lehman Brothers in 08. So they're thinking the potential error that the ECB is currently making by withdrawing the liquidity, ending it in December 2018, and kind of talking about the hike or a potential hike, is similar to July 2008, when the ECB delivered a 25 basis point rate hike just before the collapse of Lehman Brothers in September. So people actually think that the ECB is making a huge error here. And
yeah, that's an interesting view. You know, everyone believes what happened to Lehman was based upon bad paper, the mortgage market, secondary mortgage market, the housing bubble. And you're saying the icing on the cake in 08 was ECB delivering a rate hike right before that.
Yeah, it was just a big collapse. You know, I think people were warning ECB, and certainly the US and the Fed was already cautious, and, you know, the ECB knew that, and they were like, nope, and they went ahead with that rate hike, and it was a disaster. You know, they had to reverse it. It just was such bad timing, and they seemed to be operating with blinders on. And some people, especially in the big macro hedge fund community, are questioning whether they're doing that this time around as well. Because, you know, there's been talk out there in the market, just among economists and just among, you know, people, you know, just in the news and on TV, that, oh, US growth is slowing, or we're growing less rapidly here in the United States, and now Europe is going to pick up and be the engine of growth. And like, when has that ever happened? Like, if the US slows, everything else generally slows too.
Yeah,
you know,
they used to say if we caught a cold, the world catches a pneumonia.
Exactly.
So you know, when you think about this, instead of a Lehman collapse, since, you know, the balance sheets of most banks in the U.S. Are much stronger, could the collapse be something like banks in Italy that are way underfunded, or Deutsche Bank with your old employer that has the largest derivative book in the universe, in the cosmos?
Exactly. There's just a lot of risks, all the ones that you just pointed out. And also, you know, in May, there's the European Union parliamentary elections coming up.
Yeah.
And that's a big political risk, because these kind of populist parties are gaining in popularity at the polls. And the reason why that is a little bit of a problem is because these populist parties tend to be Eurosceptics. They want out of the euro. And so that's not good. And whichever parties are, come to the forefront in this election, they're going to shape European policymaking for the next 5 years. And so the market's quite worried about who's going to get elected. And so that risk goes through May. So if we take a look at this Euro chart here, we just see topside resistance around like 116.40. That's that white line. We're obviously holding support pretty solidly at 112. But where can this go? We just take this back to a 5-year chart, and we see that low in 2017 of 103.41. And basically, I'm calling euros going to move to parity. So we like to look in global macro at big directional trades. So you can play this over like a 6-month view. And so we try to look for, big themes, and we track the themes that end up, being a big directional trade. So where is the potential to have one?
Okay, so that's a bold forecast.
Yeah.
And you're also, besides a risk taker, risk manager. So what would change your view? Would it be a breakout over the top side of the triangle, rectangle you were showing before, back over 116? Would change your view, at least intermediate term?
It would more have to be news. I mean, if you're trading shorter term, yeah, if you're like trading, 1 week out, of course, if we break that 116.40, you want to not be short the euro at that time. But then, you have a top side, another top side here at 118 here, 118. But, just on the 6-month view, it'd really take news, some sort of economic, or, either the European economy would have to strengthen, maybe the US economy would strengthen and take, Europe with it. Maybe the US economy isn't slowing as much as people think it is. And we don't really know right now because we're in data shutdown. We may not even get the GDP data because of the government shutdown. So, it's just a lot of risk right now. I don't really see something that will turn it around near term, but of course you need to really watch the headlines.
Yeah, everything can happen. So this is a 6-month view for parity.
Yeah, this is a 6-month view because I want it out beyond that May EU parliamentary election for sure. And I think, not beyond tomorrow's rate meeting, when I do think Draghi will be dovish and it will impact euro negatively. I think, they'll continue to be more dovish, and maybe that policy error will become more apparent over the next 3 to 4 months.
Yeah, I was thinking, 105.80 is a breakaway gap that we had after Macron was elected. Might be an area, but 78.6 back, something like that, or the rally from 103. But you see that gap there in 2017? Go to your right a little, one more. There you go. You Amelia, you don't get a lot of gaps in FX because of
True, yeah.
You get gaps in IBM and stocks, things that closed, but FX money never sleeps. Well, FX only sleeps on Sunday.
Exactly.
So, all right. So that's a pretty bullish view for the dollar. With what's happening with Brexit, if the euro's going to parity, is cable going to under 120 towards 117?
Yeah, I mean, here we are with Theresa May, and she seems to have 9 lives. She looks upset.
So sad.
I know, she does. She doesn't have a lot of reason to be happy right now. So. I
feel like,
she's got 9 lives. She keeps winning, Every time you think you're going to count her out, she's right back in the race, So it's she's a very interesting figure. But, I just want to let's just briefly look at
that is cool.
The 2016 stuff. So here we are, just to review, June 23rd, 2016, look at how euro the sterling just gapped. See, we stopped right at 150, the figure, because everyone on Wall Street was really positioned for the referendum to not go through. And so they thought this would break topside 150. And of course that didn't work, and it plummeted. Very dramatically. And here is the G10 on the day, just a 1-day change from the referendum to the day after the referendum. So yen, the safe haven currency, strengthens, everything else, falls. So you could have been short like any currency that day and done really well.
Right.
We lost 2.1 trillion in the global stock market overnight that night. So very dramatic. And now currently, let's just take a look at what the Bank of England is saying.
Oh, yeah, Carney's scenarios. Go ahead.
his Carney scenario. So he issued a financial stability report in late November of 2018, and it was very, very dire. It got a lot of press coverage. And so here, if you read the last sentence here, this is taken directly from the Bank of England's financial stability report. It also sees the pound in an unprecedented collapse to below parity with the US dollar. This is the forecast for a no Brexit, and no negotiated Brexit outcome. They're going to leave a hard leave, basically. And so, that's really scary. And it also just gives you a sense of the magnitude of the risks around what's happening right now. And it's not the base case forecast, but of course, in macro, we always want to look at the risks, and we always want to look at if there's a big directional move potentially coming. We just want to highlight it and what we can do, because moves like this clearly make or break a trader's year, and they can make or break a trader's career. You know what I mean? Like if you were trading on Wall Street and you missed this move, like if you missed the sterling short back in 2016 on the referendum day, and you were an FX trader at a bank or a hedge fund that day, you lost your job, because your only job was to make money or protect the bank that day, or both. And if you missed that opportunity, the biggest one-day move in sterling, like in the history almost of the currency, then that's not a good outcome. So we definitely just want to highlight here, and this isn't clearly my forecast. This is the Bank of England's forecast, so that's something to pay attention to.
Okay.
We broke topside 130 this morning here on sterling. We're holding support at 128 the figure. It's just that there's hope that March 29th deadline, when they're supposed to leave the EU, is going to get pushed back, and so that's why sterling is rallying today. I don't really care. I mean, it's just trading idiosyncratically on headlines. We also see headlines on Bloomberg this morning that Theresa May doesn't want to push the date back, that achieves nothing. And so you're like, oh no, every time I feel like Parliament tries to do something to negotiate and make the Brexit exit a little bit better, Theresa May takes a hard line. And so far she's kind of succeeded. So, you don't really know what's going to happen. I think the best case is that they push that March 29th deadline back, and at that time sterling would rally. But still, there's just so big of a range of multiple outcomes that could come that people are super nervous about sterling. And here you just see 2016, that was the day of the referendum, how it fell. And this was like a flash crash in October of that same year. And so that's where I'm targeting sterling down here, the 120 level. And I think it could even move lower. It should, we have a messy exit. And so that's just something to watch. That's just something to continually monitor those headlines. When they turn increasingly negative, you're going to see the pound really react negatively. And the reason for that is because traders don't want a repeat of 2016, when some of them missed that collapse in the pound. So once the headlines get really negative, people start loading into those short positions, because
so that's why the market has a memory, because traders do.
Yeah, exactly. Because that really, so many people miss that trade, and it really, it's instructive. Maybe those people aren't working, they lost their jobs at that time, maybe they're back in the market, but for even newer traders not trading at that time, that's like epic. That was a huge event, and it's rare in macro trading that the same event happens twice. And here we come again. We're still doing Brexit, and there's still no outcome in how the UK will leave the EU, and we have a date. We have March 29th, and we're watching that date. And you kind of have a roadmap. It's amazing how long
they've stretched it out. It is amazing.
Exactly.
So, Amelia,
no one wants to miss the trade again.
Yeah, you don't. No one wants to miss it, and I miss trades every day. But you're right. You're talking about no one wants to miss home run days. If they get the pitch right in the zone.
Exactly.
Coming from the hedge fund community and your background on Wall Street and hedge funds being part of the COT report, I'm wondering if that commitment of traders report, if that is also something that you integrate into your analysis or ignore.
No, for sure. I mean, I use that positioning data. I also get proprietary positioning data. I get the public data from the commodity board. But
right, the FTC,
I also get some proprietary data from some of the large foreign exchange trading banks, like on their clients, so they can show like real money or hedge funds have flipped, and that data is more timely. It's like it's released a couple days a week, so sometimes we can get ahead of that data just by looking at client flows at some of the banks, which I have access to. And yeah, that's very important. It can tell you, when a long, or you can tell you when a short is very, very extended, that, you're risking seeing a short squeeze. Or,
what's your philosophy? What's your philosophy on leverage? You talk about missing trades. Isn't it easier to not miss trades if you reduce the leverage and you could not have a 50-point stop on a macro trade? Don't you really need to, risk 200, 300 pips on a pound or euro trade to be there for an event?
Once again, it's about management. So instead of, I think the retail community, or my experience with the retail community is, even as we're discussing right now, even how I'm discussing this right now, is we tend to look at trades like one by one, and more in the hedge fund space and in the banking space, you look at a portfolio of trades. And so you would allocate leverage to different trades. So right now, say if I had a 6 month, if I was short sterling if I was short a sterling put like 115 6 months, and I was short a 6 month euro dollar put at like say 110, at this point I would allocate about 75% of my resources to the euro trade, and I would allocate 25% of my money to the sterling trade, just because right now sterling is so idiosyncratic and it's just trading off headlines and we don't know what's going to happen. As we get more information on sterling as to what might happen, then we'd put more money towards that trade. But we just don't have that information right now. So that's kind of how we look at it. We're never really trading just one at a time. We're kind of trading as a portfolio. But you're right, in macro, which is a little bit scary, I think, for retail, and a little bit scary now as an individual trader, as opposed to having, a bank behind me or a hedge fund with other portfolio managers with me. And, like sophisticated risk systems that we can tell everything. You do want to swing for the fences for macro trades, but you have to, just pick one or two, and that's what you want to go for. You can't certainly do that with every trade you do. That's not going to work at all.
Okay, so let's say that both your scenarios work out. They imply, weaker sterling, weaker euro, much stronger dollar. So does that kind of put you in a deflationary camp for almost all assets, because a stronger dollar really is deflationary? Could put pressure on commodity prices, emerging markets.
What's really going to put prices on commodities and emerging markets too is, in general, like the U.S. and China simultaneous slowdowns. That's really, really tough. If you just want to look here at just a couple charts on China. So, the China growth slowdown is really impacting the Australian dollar. And they're also in a housing slump in Australia. If you just look at, this is the white line is Aussie dollar, and that's that flash crash. But here is renminbi, dollar renminbi. So it's inverted, so high and low. So as this is moving lower, renminbi is getting weaker against the US dollar. Basically Aussie can't rally as renminbi is getting weaker. It's not really possible. As it weakens, it drags Aussie down with it, because it's kind of a growth and commodity story. Copper prices have been trending down as well, which is bad for Aussie. And then if you just look, this is kind of like a macro theme people are watching. This is 7. This is the same chart. So renminbi's inverted. People are just watching 7 on renminbi. Yeah. And, if it breaks, that's a huge level to break. And that'll take Aussie, the night, I'm saying the evening it breaks, because that's when they set the reference rate in China is our.
Are you looking for that to happen? That has been the trend, and
that's been the trend. They're coming back up, and we have trade negotiations, so they probably won't depreciate the currency during the trade negotiation. They kind of play around with that, but you don't know how those trade negotiations are going to go. You don't know how much more China is going to slow, but certainly if it slows, they're going to let the
You know, as a commodity broker and trader for a long time, I always watched what the Chinese were saying, because they're always doing the opposite. They would announce that they're, you know, buying bonds when to create a rally to sell into, or they were selling corn or soybeans so they could buy it cheaper. And their most recent statement about the yuan was that they wouldn't weaponize it. So I'm thinking eventually they're going to weaponize it, and you're thinking that if the trade wars intensify, that's when we take out 7.
Yeah, and that's really bad for Aussie. I mean, it's pretty hard to trade renminbi, but Aussie's trading along with it, and it's very liquid, and that's what you want to do. You hear they're setting the reference rate even close to 7, you know, like 6.9. And, you know, 7 we got down to at one point, or if you want to say up to, but yeah, traders are watching it super closely, and, you know, they're going to put on Aussie shorts immediately when that happens. And so here we just take a look at Aussie. There's that flash crash at 67.41. And then I'm looking down to the October 2008 low at 60 cents. So, you know, there's not much between that flash crash. There's not much here.
Yeah.
You know,
I know some people even talking 40 handle if that happens. So, you know, I'm going to have to thank Joe after this for introducing us, Amelia. It was really a great presentation with some macro views, and I think it's CNBC's loss that you know, I don't know what happened, but that they're not using you, because your knowledge base and communication skills are, you know, top notch, elite, and like it or not, like it or not, you're now my trading warrior sister, and really a pleasure meeting you, and wish you great success on your 6-month forecast, and would love to have you return down the road.
Thanks. Yeah, sure. I'd love to come back on. It was so fun talking to all of you. I love talking to the retail community. All the traders are so nice and so knowledgeable and so fun. This is my website if you want to find me. And if you just hit get the guide now, you'll get free content, and you'll also get notices about when I'm speaking and when new products are launching.
Okay, so I encourage people to go to www.marketcompassllc.com. And you're not that active on Twitter, but your Twitter handle is at Amelia Bordeaux. You know, so
I'm not that active on Twitter. I have to start being more active on Twitter. I'm a big Instagram person, so you can get behind the scenes kind of stories and trading tips at Instagram at Market Compass if you're on Instagram.
Okay. All right. Well, you know, if you get active on Twitter, I'll support you. So,
thank you so much.
Feel free to tweet in my stream anything you have, Amelia, and glad to have met you, and good hunting.
Nice to meet you too. Great. Take care. Thanks, everyone. Have a good day. Good luck trading.
Amelia. All right. That's it, everyone. Remember, don't just count your pips, count your blessings. You're welcome, and we'll see everyone tomorrow. Adios. Thank you, Amelia.